Welcome back to Emirates 24/7. 2011 was a tough year for the Middle East. We saw a number of uprisings across the region that put an economic strain on countries involved in these protests. And our markets also had a bumpy ride.
With the exception of Qatar, all markets in the Arab world closed the year with sharp drops in both share prices and trading volumes.
So will 2012 show more positive growth? Well, joining us this evening to explain what we can expect in the year ahead for our stock markets is David Varghese, a fund manager at Emirates NBD Asset Management. David, welcome to the show.
Thank you very much, guys.
Pleasure having you. Now, looking at 2011, not the best year. In terms of the UAE and Qatar, we saw them both denied MSCI upgrades twice within the space of 6 months. So, looking back at 2011 now, would you say anything positive came out of that year?
You know, absolutely. In terms of the countries that you mentioned, Qatar and Saudi Arabia in particular, Qatar was up for the year. We did see a number of Qatari companies actually do quite well, including the banks. So depending on the banks you were invested in, you could have had returns of somewhere between 15 to 40%. On the Saudi Arabian side, you had to be a bit more selective. A number of stocks went down, but we also saw companies like Saudi Arabian Fertilizer Company have good years, end up on the year. You know, in terms of UAE, which is probably where most of your viewers are concentrated, you know, on the UAE side, we did see a number of the financials trade pretty well. National Bank of Abu Dhabi, for example, closed in the positive for the year. And so we do think there are things to build on for 2012. With regards to the MSCI, I think it's worth noting that MSCI has just postponed it for another 6 months. They are going to look at it again in June, and so that could be a potential catalyst for these stocks in June of next year.
Do you think there was maybe a bit of a disconnect between what was happening with the UAE economy and how it was reflected on the markets? If you look at the sectors like trade and tourism in particular, certainly showing some strong growth, and yet we didn't quite see that on our local markets. Looking at the MSCI index, dropping by almost 20%.
Absolutely. I think there is a bit of a disconnect, and the reason for it is that the local exchanges really have a very high concentration of companies in financials and in the real estate sector. So some of the sectors that you've mentioned, tourism, trade, consumer stocks, are not very well represented in the local stock market. And so we would like to see some of these companies that are in some of these sectors, airlines, retailers in the malls, get represented and get listed, because currently a lot of those companies are actually owned by private individuals.
All right, now looking at the decline as well, it did have an impact on the brokering business here with investment banks like Shua Capital and Rasmallah actually closing down their retail brokerage services. Other banks, HSBC, Nomura, Deutsche Bank, reshuffling some of their structure here in Dubai. So what can we expect then in 2012, do you think?
You know, in terms of 2011, it was a disappointment in terms of volumes, in terms of value traded on our local exchanges. If you look at the DFM as an example, we were trading on average about $35 million, or about 130 million dirhams per day. That was roughly half of the levels that we saw in 2010. So those value traded numbers did come down, and as a result, you're right that we did see a number of the brokerages kind of realign their costs. You know, in terms of 2012, I've talked about some of the catalysts that I do think could be positive, including MSCI. So I do feel like there is a possibility that these volumes should rebound this year. There are a number of interesting things happening, and we also do believe that the earnings of a number of these companies should be better this year than last.
Speaking of the rebound, what kind of improvements are you seeing, sort of, I guess, percentage-wise? What numbers do you think we could see this year?
You know, depending on the company and the country that you're looking at within the region, we do believe that earnings growth of somewhere between 10 to 15% is quite possible and quite probable, actually, for the region. We do see a significant rebound, for example, in a number of the financial companies, and I think that's going to drive some positive earnings growth for the region as a whole.
Now, looking at the region specifically, Qatar, of course, they've just introduced some new rules designed to get SMEs to list on the exchange. Looking at Saudi opening up their market to foreign investors, what else needs to change across the region to try and encourage some more investment here?
You know, one of the things that we've identified as being a bit of a roadblock is the fact that we've got some still pretty tight foreign ownership restrictions on a number of the companies. I mean, you look at Etisalat, foreigners aren't allowed to own that particular company. There are a number of other companies in the region where, you know, Aramex is an example. foreigners can own 49% of the company, but if you look at the stats, they already own 48.8% of the company. So they're almost at that limit. So in terms of the foreign ownership, I think that is something that can be improved upon, and we would like to see that improved just because entities like MSCI have also mentioned that particular point. In terms of other things that the companies themselves can do, I think improving the corporate governance is something that we'd like to see. Companies putting out detailed disclosures in terms of their earnings releases. I think that's something that investors look for, and especially international investors. We're not just looking at the region, but also comparing local companies to investments in the UK, France, the US, etc. So it's really about being the best and not so much about just looking at where we were in the past.
Mm-hmm.
All right, then looking internationally, looking at the global scene, in terms of the United States, Japan, they have some major debt deals that are going to mature this year. So how do you expect that will impact things? What effect do you think it's going to have, obviously, on the global markets and on us here in the Middle East?
You know, in terms of 2011, I think there were a number of surprises for investors on the global scene. I think if you look back at the past 12 months, you know, very difficult for investors to forecast, for example, that the U.S. was going to lose its AAA rating. Very difficult for investors to forecast that you'd see so many debt issues in Europe, which would impact us just because we're such an open economy here. We're dependent on trade, we're dependent on tourism. You know, in terms of 2012, we do believe that the regional companies and countries are quite well insulated, especially the GCC. These are companies and countries that have very significant oil revenues. Oil continues to do reasonably well. They've got young and growing populations. That's going to create demand in the future. And so we do think there are some positive catalysts for investors in the region. We do acknowledge that there could be issues that come up overseas, but I think as we've seen this year, regional companies have done significantly better than the market overall. So I think if you are an investor looking at the global landscape, we do think that regional equities do provide a pretty decent entry point at this point.
Mm-hmm. So slow and steady for the year ahead, we hope. David, thank you so much for joining us this evening. Appreciate your time.
Always a pleasure, guys.
Thank you. So where are you investing your money this year? Will you take on the stock markets?